What's up, what's up? It's your boy CoreyB. So today I want to talk IPOs. Like, I really want to get a grasp on what it is we're talking about. Okay, so an IPO, for those who don't know, is an initial public offering. It's a private company that's going public, okay? Now, the valuation of said company is what's going to really determine your capability to capitalize on this moment, okay? Oh man, over the last few years, there's been a handful of really incredibly big IPOs that were like Robinhood was one that was a big deal. Robinhood, so many of the people who were just amidst the pandemic, okay? So amidst the pandemic, the thing is that people were getting money and they were trying to figure out what to do with their money. And so the investing in the stock market was something that was trending. It was trending on every platform you could think of. It was literally in the media, it was in social media, it was on Twitter, it was on Facebook, it was everywhere. But a lot of people still didn't understand what they were doing. They didn't understand what they were getting involved into. And Robinhood kind of put it out there that they were a one-stop shop and they were just so easy and they were a non-profit, blah, blah. Okay, Robinhood was in concept not a bad idea. Okay, but the problem, Robinhood wasn't as effective as many thought it was going to be. I, myself, not a fan. Absolutely not a fan of Robinhood. A lot of people think Robinhood's a great place for beginners. It's not really my opinion. And I'm not here to throw shade. So if you're into Robinhood, that's good. You know, I ain't mad at you. I actually like Stash. Stash is a great app, and I'm not in any way endorsed by Stash or anyone else for that matter. I'm just here trying to help, and I think Stash is an incredibly beneficial app that can help you just kind of get started when you're someone who's just kind of new to the game, because you can start out in small portions. Stash is big enough organization that it can back what it's leveraged. Whereas Robinhood's found itself in the hot seat, you know, trying to play ball with the big boys when it wasn't there yet. But Robinhood was a very sought after IPO that when it didn't blow up the way it was anticipated, but that doesn't mean it's not going to. So I'm not saying that if you have in any way invested into Robinhood as an IPO, then that's not necessarily a bad thing. Now, the reality is that when you're looking at some of the biggest corporations in the world, some of the highest volumed, the biggest valuated traded companies, you're looking at like Amazon, Apple. You're looking at some of these companies and you're like, okay, not every company that comes out is going to be like that. Like Tesla, when it was an IPO, Tesla was, I think it came out, it was like $5 and something. I mean, you're looking at a $5 company. Right now, the shares are trading at like I believe the other day I looked and it was like 122. So if you invested at $5, okay, it skyrocketed, you know, when everybody was buying into Tesla stock during the pandemic. It was huge. It was like up over 400. And then there was more people trying to buy in. They're buying, trying to get it higher and higher and higher and higher. And they're like, I don't want to miss this because it's just going so fast. But people didn't understand that it was going so fast because so many people were buying into it. So at the IPO stage, it is the, like I initially stated, it is the critical moment when a company is initially taken public, its initial offering. So that idea is that it's the first time it's been available for you to buy into it. So it being its first opportunity, some people evaluate a company much higher than is reasonable. I remember one that I, myself, and a couple of my partners were all looking at, and I mean, you're not always going to get it right. You're absolutely not always going to get it right. But we were looking at Coinbase. We were looking at Coinbase because we saw the potential in crypto. We saw the potential in actually getting policy in place for crypto and doing away with all these crypto cowboys and things like that, and actually having things accelerate and progress and having a publicly traded crypto firm was like this is going to be a big deal. And I still think it was a big deal, and I still think it is a big deal. I don't think it's a loser. But I remember on the morning that it dropped, there was speculation of it going public, and then it was supposed to go public a month earlier, then it didn't, and then they're like, oh, well, it's going to drop. And I remember, well, at the time, me and my partners, we had all of our liquidity was invested. We had nothing liquid. Everything was invested. We had no capital to acquire another investment at the moment that it dropped. I remember it being, like I said, we had continued anticipating the drop of it, and it had been pushed off. And then I remember the week before it dropped, I was like, oh man, this is going to happen. We need to get some capital. We need to liquidate some assets over here. And I remember trying to do that. And it was when you have money invested in multiple accounts and you have money invested in different places, getting that liquidity is sometimes challenging when you're leveraged the way we were. I hope to never quite be in that situation again and be ready and prepared. But it turned out that it was actually a blessing that I found myself in that situation, because when I found myself in that situation where I was unable to have the capital that morning, I didn't have any cash. I had no I didn't have the money available that morning. And so when it dropped, I was like, oh no. I hit my boy Z up. I hit Garrett up. I was like, guys, can you believe this? I was like, we missed the window. I can't believe this. But it was evaluated so high that when they released the shares, and they were selling over $400. I think they released it like $436, $437, something like that. It was insane. You're looking at it, when you go back and look at Apple, you look at Coca-Cola, you look at Amazon, and you look at some of these companies, and they released initially for like a few dollars. You're looking at, oh, this company released for $1.81. This company released for $5.37. This company was released for $2.50. And it's like, then you see Coinbase, and that was because it was so highly anticipated, and because of crypto, it was all the rage at the time that this company was valuated. The valuation of this company was huge. It was astronomical. It was ridiculous. It was way overvaluated. So instantly it dropped, and instantly within hours you just saw it going up and up and up. We're just like, how's it? It just keeps going up. I missed that spot. I was like kicking myself. I was like, I can't believe I had done that to myself, right? But like I said, it turned out to be a blessing, because at that moment, it just kept rising. And then when we come back and look at it that evening, like I said, for hours I was just watching, and I was like, okay, I can't do this anymore. I'm done. I'm over it. I'm sick of this. I can't sit here and watch what I just missed out on. And then that evening, it started to drop a little, and I was like, huh? But only a little. And it was some of those people that got in early. So they got in early, and then as they watched it, they're like, oh man, it's going up, let me sell. And it's like, I made my money, man. I made 50% of what I put in. Like there's always people like that, especially with IPOs. There's always going to be people who jump in from very jump, and they're going to jump in, they're going to buy. And then after hours of watching it go up, they're going to be like, okay, sell now. I don't want it anymore. These are, some people call them day traders. Some people call them scalpers, because that's what they're doing. They're looking for a moment. They're looking for that little window where they can make a little profit. They're not looking for the big bang. They're not the Buffetts of the world, because they don't believe in that long haul. They don't believe in that time-honored, So look, what I tell you, it was a company, Rivian. And honestly, I don't know their valuation right now, but I remember back in 2021, they were very big, eagerly anticipated company, because they were doing electric cars. And so there was like, all these people were like anticipating that IPO dropping, and they were anticipating this IPO dropping because of the valuation of Tesla. Then this one is like, but like, who knows Rivian? Who? Anybody? Hands? Show of hands. Okay. The reason is because it doesn't matter. Okay. It was anticipated, but it was anticipated for not really the right reasons. So what I tell you when it comes to IPOs, what you've got to do is, first of all, the ability to invest in an IPO, you need to. There's going to be some that are going to be available on these, little platforms and stuff like Stash and Robinhood and things like that. But if you want to get in the very jump, sometimes it's best to actually be with a broker. That's going to be, you're going to want an account, brokerage, and be able to have, you can actually apply towards the, when you're anticipating it dropping. Okay, there's this window. Okay, but the thing is you need to know the company. You need to know, okay, what is it? What is the valuation of the company? What are we looking at that stock price, that opening, that initial drop? What is the price going to be? And why is it there? Why? Why are we evaluating this company so high or so low? Now, most IPOs are going to be they're going to be bottom. They're going to be nothing. They're going to be in comparison to other companies. But then you look at you look at something like, some of these companies, they've been around for 10 years and they're $15 stock still. It's not a sexy stock. That's what it comes down to. It's not a sexy stock. And you look at when it dropped, it was $2 and now it's $15 a share. So that's still an incredible increase. But it's not the talk of the town because people aren't talking about that because people don't care. Now to investors, that still matters. Money is still money. Money always going to be still money. And when it comes down to it, when you talk to somebody like my boy Z at the end of the day is, to him, dividends are always great. To me, dividends are always great. But to him, the biggest thing is risk management. Are you going into something knowing what your outcome is? Some people think the stock market is a gamble. The stock market is not a gamble. I don't gamble on the stock market. And Z doesn't gamble on any of his investments. His specialty is risk management. And so he's going to do diligent, thorough, extensive research. If it's out there, he's going to find it. Now, of course, with any given company, there's always going to be information that's not out there. That was a conflict for Mr. Elon Musk and Tesla. Back when he considered buying Twitter the very first time, was because he was putting information out there that because of stockholders and things like that, there was information that was privileged and classified and not yet available to the public. Okay, so with that, you have to consider that any given company at any given time, there's always the possibility of information that's not available. There are going to be things that you may not know yet. There's going to be things you probably don't know yet. But like I said, with my boy Z, the thing that he does is if it's out there, he will find it. And that's how I operate. When it comes down to it, I knew AMC was about to blow up. I knew AMC was about to blow up back in November. Back in November 2020. Wait, is that right? 2020? 2021, right before 2022. Yeah, okay, it was back in November of, it's getting fuzzy now. I think it was 2020. But I knew AMC blew up late January, beginning of February. I knew about it in November because I saw the things that they were doing. The CEO had been discussing the several different things, the aspects of changing the company, across the board. They wanted to. They'd been shut down during the pandemic. They had been closed off. They didn't have clients. They didn't have customers, and they were teetering on the brink of bankruptcy. Now, teetering on the brink of bankruptcy to a lot of people is an opportunity to get out. But why? Why were they on the brink of bankruptcy? And see, to me, that was the telling point. They were teetering on the brink of bankruptcy because of a pandemic, because of what was holding them back from actually growing. But then when the CEO was like looking at, hey, look, we're going to be able to open back up, but when? Okay, when we open back up, what are we going to do? Okay, and what can we offer our clients and our customers to make up for all this time that we've been shut down? There was so many different, Alamo Drafthouse, there was, what was the other one? There was another big movie theater that had closed several theaters throughout the country. Drafthouse shut down several of them. It was kind of a bummer for some of us in Austin as they shut down the very first Drafthouse, their flagship location. And we were like, oh, what a bummer. But, you know, it was time. Based on where their company was going, they had to salvage their company and salvage their, be able to continue to offer things for their clients and their customers. So when you look at things like that, that's when you can see where a company is going. So when an IPO, you've got to see, okay, what's the market that they're coming in? See, because looking at a stock that's already existing, a company that already exists, you can see so many things. Now, an IPO is a company that exists. It's out here. It's just, what are they doing? The reason I anticipated Coinbase, because everybody was using it. Coinbase was a company that everybody was using. Like everybody. But because everybody was using it, every different crypto firm, every different trading platform, everybody you could buy through Coinbase. And everybody, if you were using Coinbase, it was user friendly, it was incredible. But like I said, and that's why I still to this day, even though it was evaluated so high, went up, skyrocketed day one, and then dropped. I didn't buy in day one, but I did buy in a couple of days later, and I watched it go up, and then I watched it, and about this point, I bought in, and it still went down just a little bit more. But to me, it's going back up. To me, I'm still holding fast. I still see the valuation in that company. I still see the value and the promise of what this company has to offer and how they're going to continue to grow. And I will get my return. Especially as the crypto world and the economic structure of our nation and the world, no less, is continuing to change. We're going to continue to see new things, and Coinbase was in the beginning. Coinbase was there from the jump, and Coinbase was the very first publicly traded crypto firm. And as they get more platforms and more firms, and as they get more policy into place, I'm going to see this one have its opportunity to rise, and it's going to still, I'm going to see the return. Now, I'm not telling you to go buy Coinbase. I'm not telling you to do that. I'm telling you that to understand, you have to see a reason that this thing is going public. You have to see a reason why it's going public, why it's valuated the way it is. Is it reasonable? Is it low? Is it high, but yet still worth it? See, when I went in to Coinbase, I knew it was still high. I knew that it was going to go down a little bit more, but I was like, you know what? It's going to go down a little bit more, but I'm not sure how much. I couldn't really gauge how much. And I didn't want to miss that window of letting it bottom and then head back up. And I was up on the upswing again. So I got some liquidity, got the capital, went ahead and invested in, took my stake. I've watched my stake fluctuate. It is what it is. There is so much more time and opportunity, and I know it will pay off. When you have the opportunity and you see a company, you have to really take the time to figure out what they're about. Take the time to figure out why they're evaluated the way they are. Why is other people anticipating them? What is the potential in the opportunity? Rivian, I didn't see this company as being valuable the way that it was eagerly anticipated. And it was eagerly anticipated IPO because it was a new company. Okay, see, to me, I saw Tesla was already so huge. Tesla was a titan when it comes to electronic vehicles. Okay, and then you look at people like Ford. Ford was coming of age, man. They were like, we've been around since the beginning, but now we're going to offer electronic vehicles and we're going to compete with Tesla. Okay, so to me, the valuation of Rivian, the anticipation of Rivian, to me, wasn't enough when you look at a company like Ford. Because the company like Ford is still there. So to me, for me, I didn't take a stake in Rivian. I actually invested more into Ford. I already had a little piece of Ford, but that's when I was like, yeah, I gotta up my stake and expand on my shares in Ford, because Ford's not a sexy stock. So to me, it's gonna be overlooked. But to me, it's gonna compete with Rivian. To me, Tesla's gonna still stomp it out all day. So to me, that was my opinion. Now that may not be your opinion, and you may have made some money off Rivian. You may not have, I don't know. And the thing is, it doesn't really matter anybody else's opinion. What matters most is your confidence and your perspective. You know, if you've ever seen, I mean, you've got to believe in what you're investing in. You've got to, like I've talked about it before. I've talked about the ability to be comfortable and confident at the end of the night when you're counting your stacks. When you look at your bank account, you see those numbers and you're like, yeah, you know, I got this money, but I really feel guilty about the company that I invested in because they, you know, they don't align with my moral beliefs, or I really, you know, just think it's bad for the environment or the world or something. Like, don't do that, okay? Don't be convinced or tricked into buying into something that you don't care about. I got a buddy who's got a huge stake. His stake, I think it's like 4 times my stake in Tesla. He talks about he hates Tesla, but he sees it as money. He's like, man, I don't care, it's money. He's like, I can get money. And that's fine. If you have that clear conscience that, hey, it's just money, it's all just numbers, fine. That's fine. But do you see a value in the company? You've got to truly research. You've got to understand it. Like I said, the IPO stage is the most critical point in a company. It's the moment at which, like, everything changes. Everything changes. And it's like, are they going to thrive or are they going to tank? Because sometimes taking a company public is what tanks it. So, again, I reiterate that this in every one of my posts. What it comes down to is just really being able to research a company, not just, and with an IPO, it's more than just a company, because you need to know whether that company is going to be beneficial, whether it's going to grow, whether they've got a good platform, whether the market is right. And see, that's where the biggest key is the market. What is the market valuating it at, and what is the comparison? Like I said, that's why I use Tesla, Ford, and Rivian as a good example, because to me, at the end of the day, it matters what else is happening in the world if you're bringing in a new company publicly. A company may have been sitting around for a hot minute, but there's a reason. Okay, and that's the thing too. It's like, this company's been a private company for 5 years. Company's been private for 10 years. Company's been private for however long, and we're going to take it public. What does taking it public mean? Why did they choose now to take it public? Are they just finally on the level to be public? Or they finally just got the capital? They're trying to generate more capital? Are they in a bad position and they need the capital? That's just what it comes down to. The Green Bay Packers are, what's it called? It's public. It's not a traded company. They have community shares. So they offer community shares. They've done it twice in my lifetime. Okay, and when they offer these shares, you buy a stake. You buy a share, and you are a partial owner of the Green Bay Packers. They're 100% transparent about what that community share means. That community share means that, yes, you are now a shareholder and you are a owner of the Packers. A partial owner. Very small partial owner. But that community shares are open to the public whenever they need an influx of revenue. They need an influx of capital in order to better the stadium, do some things here or there, whatever it is. But they talk about these things. They did this just a couple of years ago. they released shares for a 4-month period, and they had so many thousand shares available. And when they did it, they said, it's because of this. This is what we need the money for. And they had a whole list of things. You could see it on their homepage, on their website. You could see, hey, this is what we're investing our money in. You know, we need y'all to buy shares. Buy some shares in the company. Take your stake of the Packers. And it's the only publicly owned NFL team. I think it's the only publicly owned professional sports team, period. But see, that's what you need to know, is when like a company decides, well, how long has this company, how long was Tesla before it went public? How long was Apple before it went public? When they went public, did they need capital? And when they went public, how much capital were they trying to gain? What spot were they in? Was it for research and development? Was it for the growth? See, that's the thing. Have you ever seen an episode of Shark Tank? Shark Tank, they always talk about the idea that when people bring in a company and they say, hey, we want you to invest in our company, it's kind of a similar process. It's like, well, let me ask you a question. They're vetted at that point, and they're like, where is your company at? Have you sold anything yet? How much have you sold? How many years? Has it been increasing or has it been decreasing? If you've been continuing to increase, but you really just need to step your game up, okay, that's a great time to go public. If you've been increasing and now you're starting to taper off, going public is a desperate cry at, please save me. That's not the IPO you want. So these are the things that you really need to take into consideration. There's really so much. I could really just talk about this endlessly, and it would honestly, it's one of those things that's kind of difficult to talk about without really knowing what the questions that people have are, because it comes from a completely different perspective depending on who you are. But ultimately, what the most important thing I want you to take away from this is just the concept of knowing the company that's going public, knowing where their past is, where the future is going, and what stage are they at right now. And after you know that, know the market that they're being introduced into. Know that, like I talked about the electric car companies, know whether they have competition. And if they have competition, who's their competition? How much does that matter? Or are they going public with something that they are the one? There is no competition. Like when Tesla went public, they were the only electric car company. So that was a huge, huge deal. These are the things you need to consider. I want you to just take all that in a little bit. Just marinate on it. If you got questions, please comment below. Y'all know how to reach me. You can find me on TikTok. You can find me on Instagram. You can send me an email or private messages. But if you comment below, like I said, we can always open a dialogue right here between me, you, and anybody else who's been watching the videos or anybody else who has comments or questions. So please do that. Be sure you click that like button, hit that subscribe button, ding your bell, get your notifications. Stay tuned. Your boy's got a lot more coming at you, and let's keep getting it done. Let's keep getting better. Let's keep growing, learning more, and lifting each other up. Let's get cocky and have an excellent day. Coinbase, and it was released for over